Welcome to our series of videos on the cash flow statement. Now, the cash flow statement is one of the major financial statements that financial statement users, analysts, stockholders, bondholders, it's one of the major financial statements that these individuals and groups look at. So, what does the cash flow statement show you? Well, we just got done talking about the income statement. And we just got done talking about, before that, the balance sheet. Well, the income statement, we said, and the balance sheet as well, they were prepared on an accrual basis. They used an accrual basis of accounting, which said that revenue was recorded when it was earned rather than when the customer paid us. Okay? And expenses were recorded as they were incurred rather than when the bill was paid. Okay? Now, balance sheet, income statement, they are accrual basis. As we shift into the cash flow statement, the cash flow statement is now cash basis accounting, meaning that we're going to record inflows of cash to the company, cash receipts, and outflows of cash from the company, cash disbursements. All right, that is what the cash flow statement is trying to accomplish. And at a very high level, what the cash flow statement does is it says, okay, what was the company's balance of cash last financial reporting period? What is the balance of this company's cash in the current financial reporting period? Okay, so the last year's cash balance, this year's cash balance. Those numbers changed. Those numbers are different. Well, the cash flow statement explains how we got from the prior year's cash balance to the current year's balance. So you can think about the cash flow statement as reconciling beginning cash to ending cash. And all of those reconciling items in between beginning and ending cash represent cash inflows and outflows from the company. Now, to organize those inflows and outflows, we're going to put them into three different buckets. We're going to put cash flows into cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. All right? So operating activities represent cash inflows and outflows from running the company on a day-to-day basis. Investing activities, on the other hand, are things like buying and selling property, plant, and equipment assets. Financing activities relate to financing the company, so borrowing money from a bank or selling stock or paying dividends to investors. All right? That is what these categories capture. We're trying to put these cash inflows and outflows into buckets so it's easier to understand why our cash balance changed from the beginning of the period to the ending of the period. All right. Now, before we get into more detail, there's something unique about cash flows from operating activities, one of those buckets, right? So the cash flows from operating activities section of the cash flow statement, that section can be prepared two different ways. We have the direct method, which directly tracks cash inflows and cash outflows. And then we have the indirect method. So the indirect method is kind of like a shortcut method. What it recognizes is that the income statement is based on an accrual basis of accounting, which means if we take our cash basis income, our cash inflows and outflows, and we add into it accrual adjustments, we will get our net income number. Net income is an accrual number. The cash flow statement comes along and says, well, if we know that net income is the sum of cash basis income and accrual adjustments, all that we have to do to arrive at our cash flows from operating activities is remove those accrual adjustments that we have in our net income. So the indirect method starts with net income and it adds and subtracts the accrual adjustments that were captured in the accrual net income. We're removing them to get back to cash basis net income, which is really what cash flows from operating activities represent. All right. So operating activities is by far the most interesting section from understanding financial statements and financial statement analysis. And the investing and financing sections allow us to understand, well, if we're talking investing, well, how is the company, or is the company generating enough cash from operating activities to fund their investments? Or if we're talking about financing activities, is the company generating enough income from operating activities or generating enough cash from operating activities to pay its dividends? All right. So we're going to take a deeper dive into the cash flow statement in the next video. I look forward to talking to you then. Take care.